you open your mobile and you see your stocks going up and down every now and then, and you start trading, that's exciting, right? That's entertaining, right? And I tell my investors that there is a cost to entertainment. You don't get paid to get entertained, you pay money to get entertained. So if you're getting excited in your investments when it comes to stocks, something is wrong. For sure, you're going in the wrong direction.
हेलो दोस्तों, वेलकम टू फर्स्ट एपिसोड ऑफ स्टॉकग्रो's पॉडकास्ट पैसा बोलता है। जी हाँ, पैसा बोलता है और क्या बोलता है ये जानने के लिए वी हैव अ वेरी स्पेशल गेस्ट विद अस। आई एम Ridanjali Rawal, your host for the day, and today our guest is SEBI registered research analyst Anupam Roongta. He has trained more than 10,000 people on how to invest in stock market and mutual funds. और आज हम उनके 10 years के बेस्ट lessons भी डिस्कस करने वाले हैं। एक्साइटिंग राइट? बट उससे पहले स्टॉकग्रो के चैनल को भी सब्सक्राइब करना सो दैट यू गेट इनसाइट्स फ्रॉम इंडियाज टॉप ट्रेडर्स एंड इन्वेस्टर्स एवरी वीक। हाय अनुपम, वेलकम टू आवर शो। हाउ आर यू डूइंग?
I am doing fine. Thank you so much for inviting.
You started investing since you got your first paycheck. I spent my first paycheck only on shopping. So tell us about your inspiration behind journey of investment.
So my inspiration was my father. He has been investing since 1978. So he, at the right time, called me just before I was supposed to get my first paycheck and was asking about my investment plans. I very casually said, give me a month or so. I'll get to know what I'm spending and what is left. Whatever is left, I'll go and invest in the market. And he's like, if that's your plan, then I can assure you, you will not invest for next 7-8 years because you will end up spending everything by the end of the month. So his idea was to start investing with the smallest amount possible, and whatever is left, make sure you spend by the end of the month because next day again you will get your check, right? So that's how I started. And had he called like 6 months later, I'm sure I would have not been able to save and invest what I was doing, because from the very first paycheck, I knew that my paycheck is not this is this much. So whatever was going in investing, that never came to me. I never had that chance to experience spending that money. So I think that's what made a difference in starting the journey.
Absolutely. So do you mind telling our audience what was the amount that you invested from your savings? Because I think most of the time people are really concerned that I have to keep big chunk of savings aside. So if you can share a small number with our audience.
Sure. So 2006 or 7, and that financial year I started, my in-hand salary was 17.5, and I started with 7.5. The idea is to get into the habit of investing. That's what is important. Amount is not important. So my example might not be very encouraging for most of the people, but yeah, the idea is to start.
We live in a fast-paced world where everyone wants instant gratification, right? In such times, how do you think millennials and Gen Z investors manage investing?
See, I think instant gratification is a problem of human beings in general. थोड़ा हमने millennials को ज़्यादा बदनाम कर रखा है, Gen Z and millennials. See, it's about, as I said, there's a myth in most of the people that if we don't invest a good amount, then what's the point, right? That's when they're like, right now my salary is so low, my income is so low. Let me earn a little more, let me get a good income, good saving, then I'll start investing. So that's the first obstacle. You have to get it out of your mind, that starting with the smallest of the amount is good enough. As I said, 500 rupees is also good, 1000 rupees is also good. Once you get that out of your way, then the next step is to stay invested for long. So these are two issues which people face in investing. One is starting on time, starting early, starting from the first paycheck. And second is once they start looking at the market every now and then. Then the second step is to stay invested for 5 years plus. I mean, you're tied to a goal maybe. Then you want to buy a car or a mobile phone or maybe something luxurious after 5, 6, 7 years. For that, start saving, so that when you tie it to a goal, most likely you will not end up selling that stuff and getting panicked. So I think these two things are good enough for anyone, be it millennial or be it anyone else, in terms of starting the journey.
So tell us how your investing style has evolved over the years, and please try and explain it in simpler terms for our audience.
See, I think investing style has not changed much. So I am into only long-term investing based on fundamental analysis. I think everything else is a short way to lose money, be it intraday or short-term or technical analysis. I mean, there are people who believe in it, but I am skeptical about it. So over a period of time, I've realized that this really works because I've experienced the returns. Number one. Number two, in terms of evolving, what has evolved is more in terms of connecting the dots and knowing more about. It's like compounding works not only in investing, it works in knowledge as well. So when you are doing something for 10, 15, 20 years, you get to analyze things in a much better way, right? So from that perspective, I can say it has evolved. But broadly, I am into fundamental analysis, and that which involves looking at a business rather than looking at a stock price, for example, and looking at what are the future prospects of the business per se or the industry to some extent, looking at the management when talking about stock investing, and that's how you take a call whether you want to invest in this stock or not. So that broadly does not change. The fundamental of anything for that matter does not change in terms of what you look for and what you don't look for. So that's how it has been for very long.
So Anupam, tell us, is it really possible to become financially independent by investing in stocks? We would really like to share this with StockGro viewers.
So the short answer is yes, but in the experience, people have not done that as much. Maybe they have done it in property. So for example, you might have seen people, they invested in property 20, 30 years back and now it is worth crores of rupees.
Right.
You don't find that kind of examples too much when it comes to stock investing. The reason is liquidity. You can sell your stocks in mutual funds with a click of a button. You can't do that in property, right? So I always tell my audience that the more boring your investment is, the higher the chances of being financially free through that. So property investment, if you look at it, it is quite boring. When you can't just go and stand in front of your property and you get excited about the price going up and down. You don't see that. But you open your mobile and you see your stocks going up and down every now and then, and you start trading. That exciting, right? That's entertaining, right? And I tell my investors that there is a cost to entertainment. You don't get paid to get entertained. You pay money to get entertained. So if you're getting excited in your investments when it comes to stocks, something is wrong. For sure, you're going in the wrong direction, right?
Absolutely.
So if you really want to be financially free, be it through stocks or any other asset for that matter, make sure you are doing deep, thorough research. You're investing for long, and it should actually be a boring part of your life, not the exciting part of your life.
So right now we're talking about research, right? So I'll give you an instance. Like I was just researching multi-bagger stocks, and I was trying to find more information online. But as we know, there are there's a lot of information available online. There's a lot of information available on YouTube.
The research journey should start actually from books, because as you rightly said, there is so much of information. You go online, be it reading an article on Google or watching a YouTube video or reading some report or whatever it is. So there is so much out there. You don't know what to believe or what to follow, what not to follow.
Absolutely.
Right? You get confused. So the idea is to get your mind straight in terms of what to focus on. So if you read those 6-7 bestseller books out of whatever hundreds of books are available, you at least get the foundation right. Beyond that, then when you go and read some article or some news or something, you know how to analyze and what to ignore, what not to ignore, right?
Anupam, that sounds great. I will definitely start reading some books before investing in stock market.
Okay.
A lot of young folks think that timing in the stock market is very important, right? So we regret missing opportunities in 2020 crash. But is that a regret even right?
See, unfortunately, a lot of new age influencers are claiming that timing the market is possible, maybe directly, maybe somewhere indirectly. So that's what makes people believe that we can also do that and we can make money by timing the market. It is going down, going up, and what is the expectation? But doesn't really work in my experience. And that's a bad news that we cannot time the market. But the good news is you do not need to time the market. If you look at I would say the best example is 2008 market crash. Jan 2008, the market started going down. It went down from 21,000 Sensex to 8,000 Sensex, 60% down in 10 months. In retrospect, this was the worst time to invest if you started in Jan 2008, right? If you were starting investing at the peak, right? But if you started doing a index fund investing, the no-brainer, right? Let's say a SIP in a Nifty index fund, and you did it for next 5 years, and you can check the numbers, your returns would have been close to 9% compounded annually. This is when you're starting at the worst time. If you invested for another 2 years, let's say for 7 years you stayed invested, the returns are 13% CAGR. So this proves that what's more important is to give time in the market to stay invested for long term rather than looking for reasons, finding the timing that, when the market will go up and when the market will go down.
You have been investing in stock market since last 14 years, right? So, and you must have come through lots of ups and downs in the market. You have seen it through. Can you please share top 3 insights with our audience which you have?
See, to be frank, there are no insights. The only simple rule is you learn and you have patience. And I think that works in almost every aspect of life, be it your career or be it investing. You keep learning new things and you have patience and you reach somewhere in your career after a certain number of years. Same patience you need to keep in your investing. Keep learning and have patience. Let it grow. The way you have patience in property, the way you have patience in PPF, 15 years, insurance schemes, 15-20 years, property maybe 20-30 years. Just do the same thing with investing, and make sure you learn and you research before you do that. That's the only thing you need to do and you will be sorted.
So now we have introduced a very interesting round which is called rapid fire, but you have to answer very quickly, okay?
Sure.
You can't really take breaks.
I'll do my best.
Okay. 2 stock market books you recommend?
Psychology of Money and Rich Dad Poor Dad. Start with that and then maybe you can move forward.
3 stock market influencers you admire?
Warren Buffett and Warren Buffett. That's all.
Most important trait required for stock market success?
Mindset.
In one word, your success mantra?
Okay, that's a tough one. I would say mindset again, because that's what sets you apart.
One hobby that you can recommend to stock market enthusiasts?
Well, hobby, you can practice maybe patience and your temperament by being around people who irritate you and try not to get irritated. So that would be a good way to test your temperament.
So that will create patience over a period of time.
That's
awesome.
Right.
Great answer. Awesome, Anupam. बहुत मजा आया आपसे बात करके आज.
Thank you so much for inviting and I had great time answering the questions.
Same here. आपके एक्सपीरियंस से बात करके पता चला कि पैसा क्या बोलता है.
Thank you.
Thank you.